Probably the question which attracts the biggest attention at this time in crypto space is about whether we hit the bottom or not right now, and whether we'll go to 2K, 1K, or whatever. So I personally think that we already touched that bottom, and I have separate videos on that. In the end of this video you can find the links to those videos which I told about it from several perspectives, from the TA analysis, quite unique indicators and everything, and also from the just general psychological perspective about where we will go and how the market is evolving, how the market lives and acts. So, but here I would like to show you some bearish sentiment and represent some factors or some arguments from the bears why we didn't hit the bottom yet and why we're going down. Because you know, the wise investor, wise trader always has to try to look from the different sides, try to see all the spectrum instead of just having one certain opinion. Okay, so what are the major arguments? Of course, the major argument one of the major arguments is from the bulls is the volume. Now we are in BLX, Brave New Coin, which is sort of aggregation of the many exchanges, and the volume is the same, sort of an average volume. So you can see that at the December, when we had this bottom, previous low, which was at 3,150 or something, we didn't see a huge volume spike, and moreover there's a bigger volume around here, and then basically volume is decreasing right now. So if you will return to 2014, for example, and 15th, you will see that at the very bottom we had a huge volume increase. So basically this was the point where we had the maximum volume around here, and then it was lower, then higher again, and so on. So bears claim that, you see, there is no volume, there is no strong indication of the bottom in that way. So they say, when we see that, we'll see that it will be the bottom. Moreover, I must mention this one on BLX, because somebody is also pointing this out, why we have a huge volume at this area. You know, guys, at this point of time there was some story about the Chinese exchanges, some big Chinese exchanges, which basically made zero-fee trading rules, and also they made a lot of wash trading. They increased the volume with the bots. So basically those are fake volumes, spikes, and basically a bug in the chart. So don't really pay attention to that. No whales came at this area. It's just a bug on the chart. So another argument is that, you see, usually again at the very bottom we see some candlestick with the long shadow, long tick down, like here or even here, and many other areas like this area. When you have the transition of the trend from bearish to bullish or vice versa, you have this long shadow with a long wick of the candle. Here, nothing. It's weekly chart, so it should be quite long at that point, but no, not at all. Well, for the I must say that actually I have a lot of the counter arguments for all of the things which I'm talking about here, but this is another story. Here we will just look from the bearish side. Okay, so no candlestick here around here. Another thing is bears are indicating the trend line of the fall from the top to the bottom, and they say that, you see, here is a quite clear trend line, here is another quite clear trend line, and as soon as we don't break this trend line, they are pretty parallel, you see. As soon as those trend lines are not broken, it's hard to say, it's unwise to say that we are in the the bull market. We must change the trend where the bottom was in. So now we didn't break it yet. So they expect that at some point of time we'll break it somewhere, or maybe sideways, and then that will be the more safe period when we have the change of the trend. And moreover, you can define some consolidation periods, for example, in areas like price zones. Here it was about $6,000, and then this one right now is 3,100. And if you will do the same thing here, then this was pretty much the similar area, similar price level. This was another one, and this is the bottom. So if you'll project those three here, the third one will be somewhere around 1,500, 6,000, somewhere at least around this area, right? And they are saying that we need to go sideways in this between these two lines and then break to the new area here. So the same thing is happening right now. We're going in this area, and we eventually will go this area. And moreover, if you would plot those trend lines of the minimums and maximums, you'll see that highs and lows. You will see that in logarithmic chart. Right now it's logarithmic chart. You can actually do the same thing in linear chart, but it's more representative here because those are not. They won't be not like this. Not wouldn't be such linear way. So if you will look at those lines, then in fact they are not following the previous trend. So what you want to do it carefully, properly, you'd have to draw something like this. Sorry for my ugly drawing ability. So, and the same for highs, something like this. So it's not linear, and it's sort of slowing down. It reflects the fact that if you look at the previous high and previous low, then this period was like 2.5 years, 2.5 years, something. This was 4 years, and the processes are getting slower as soon the market is getting matured. And then you would expect this period should be longer, and something like 5.5, maybe 6 years. So in that case, the period of bear market should be also longer. Here we had like 1 year and 2-3 months, maybe. That depends on where you come from. And then here it should be something like maybe almost 2 years. And we will see, or maybe at least 1 year, 9 months or something. So you would see that this must be the bottom somewhere September. It also is along the lines of previous expectation, previous arguments. So pretty much reasonable in that case. And finally, you can look at the consolidation period which we are experiencing right now here, and again returning to those areas, this blue area which we looked at this bear market in 2014, it really looks like the same as this one. So we had some correction, then went down, then up, then down, and here we went down, correction, down, and probably will go up, and then after that we can drop eventually even lower. So everything is pretty much lined up in that case. And finally, but not in terms of the importance, we have the moving averages. And moving averages are said to be quite of the strong indicators of the lows and highs. So what you can see here, for example, is that in 2015 there was 200 weeks moving average, and we pierced down to that, and then we hovered above that, returned very fast, return above that, and we hovered around this moving average, like above that, and then we tested once again, and then we rejected it, and then it was the bull market. Okay. So here it is said that from the bull side, it said this should be the same. However, bears mention that you see previous low at one bear period before that in 2011, the moving average which was used, which was support, which acted as a support at that time, was not 200 weeks moving average. Of course, there's no history to draw this 200 weeks moving average, but apparently if you'll have, let's say, 100-day moving average, weeks moving average, it will serve better job here. So it is close to 100 weeks moving average as a support at around here. And then since at the next level, at the next period, it was 200 weeks moving average, then it's reasonable to expect that here it will be something even higher order, like 300 weeks moving average. And you see 300 weeks moving average is at 2,385 or something like that, like 2,270. So you would expect it to be piercing down and then return and go above that somewhere around this area. So everything is pretty much well lined up to those conclusions, as the fact that we are about to go lower than $3,000. And moreover, from the fundamental point of view, bears are claiming that, you see, the major point of the sort of expectations from the bulls, that we are expecting to have the institutional money coming to the field, and then it makes the price rise to the moon. However, they say that, you see, the major awareness, the major problem with the acceptance of crypto is regulations for the institutions. And for example, SEC clearly stated that as soon as we have some such a manipulative area, manipulative space as crypto, it will not be accepted for example, like for ETF or something. So institutions will not get this green light from SEC, and they will be unlikely willing to enter the field. And such manipulative conditions will probably continue for years from now. So institutions will not come, they say, and if they will even come, they will not buy the Bitcoin at the spot. They will buy on OTC market, which will not affect the price. So all of that is pretty much reasonable to some extent. So you can now make your decision, make your see alternative look at the things. And the reason why I'm doing that is that you need to see both sides of the spectrum to understand, to make your proper decision, reasonable and well-weighted decision. Okay, hopefully it was useful, guys, and if yes, then I would be happy if you will see more videos which appears every day in my daily updates. And today, thank you for watching. Safe trading. Goodbye.